Hello everyone and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal. So what has happened this week? This week, Nifty has breached the level of 23,000 for the first time ever. And this new wave of bullishness calls for a Elliot wave recount. I did an Elliot wave count few weeks back and we concluded that Nifty was in the fifth wave. Turns out that count was absolutely correct with a twist. So we're going to go back to the charts of Nifty. We're going to first start with the 3-minute time frame and move on to higher time frames as we progress. And we'll finish off with the Elliot wave count. So let's get started with the 3-minute time frame of Nifty. Now, this is what we are looking at here. The 3-minute time frame. So in the last 11 days, Nifty has rallied 5.5%, which is incredible for a major index to do. Now, this rally has a lot of hidden signals for us. The first thing, the fact that the market bottomed at 21,850 rough was the first indication that we are still in a bullish market. Why? Because the previous low was not breached. And if you scroll a little bit back, the previous low on Nifty was around 21,780 rupees, which was forged on the 19th of April. So this low was not breached. So we technically did not make a lower low, even though we made a similar high. So this similar high was a first indication that there was going to be correction. But it was important that the low of 21,850 or 780, as we just observed, should be breached. That did not get breached. The key support level stood out. Since that support level stood out, we saw a fabulous rally, which was first resisted at around 22,250. Now, what is very important to note here is this breakout that occurred above this white line. This happened against phenomenal volumes, which is noted here on the chart itself. So this massive upside that you're looking at here, this occurred against a strong volume. So back then, when this rally happened, I was still a little bit bearish because I was looking at a broader Elliot wave count, which suggested that we are somewhere in the fifth wave unfolding or finishing. But it was hard to tell which was what. If one thing about Elliot wave counts, they become clearer only in hindsight. So when there is a major shift happening or when there is a wave change happening, predictability can significantly reduce. So this was the first indication. This strong rally with strong growth in volumes was a little bit confusing for me, but it also told me wait and watch the market. Next, we crossed over the resistance of 22,500 with a lot of trepidations and a lot of consolidations. It was a painful move in the market because the price didn't cross over at once. It crawled its way beyond. And in crawling its way beyond 22,500, it took one resistance and one support at this important level. However, once the 22,500 was breached with conviction, fabulously, the market went into a super bullish momentum. Now, again, this is also clear only in hindsight. If you notice here the 3-minute time frame, what was earlier constantly breaching below the level of 40 and touching the level of 30 up to 13th of May has now sustained itself above the level of 40 very consistently, establishing itself in a primary bull trend. It's a little bit of a outreach to call it primary on the basis of the 3-minute time frame, but I will explain why I'm saying that. Now, coming to the 15-minute time frame, one thing that really stands out is that this breakout, which happened with very high volumes, occurred exactly when the Nifty closed above the 20 EMA on the daily time frame or the 20 DEMA. So this blue line that you're noticing on the chart, even though this is the underlying 15-minute chart, it has been formulated in such a way that this 500 EMA is actually the 200 EMA of the daily time frame. And why is that? Now, it's simple mathematics. 20 EMA on daily time frame multiplied by 5 is 100 EMA on 75-minute time frame multiplied by 5 is 500 EMA on the 15-minute time frame. So instead of looking at 3 different EMAs, that is 20 EMA on daily, 100 EMA on 75 and 500 EMA on 15, I now have one same name for all 3 EMAs, that is 20 EMA of the daily time frame. This basically helps me with my mindset and arranging my analysis in a better format. Moving on. So here 22,500 got breached and a fabulous rally took over. The previous resistance of 25 did not stand in the way of this rally whatsoever. It got breached immediately in one sweep motion. And today we saw a breakout above the level of 23,000. What next? The most interesting observation is actually on the 75-minute time frame. And this is what forced me to update or refresh my Elliot wave count. On the 75-minute time frame, on the 13th of May, first observation was that there was a strong positive divergence which got forged. This was the first indication that the correction might not continue. Also, there were 3 other important supports. The 21,850 was a very important support. There was a key trend line passing through this very level, and the daily time frames 100 EMA was also present here. Once this support landed with the RSI positive divergence, it was an indication that we can expect some rally, but I do not know what to expect, a new lifetime high or a temporary rally with more downside. My personal expectation was that 22,500 would prove to be a formidable resistance and we might see further correction. However, the market did not come through on that. Instead, when 22,500 came, it did prove to be a difficult resistance for the market to cross, but as soon as it was crossed, it established a new bull trend. And here's why I call it a new bull trend. If you attended the last session where I did the Elliot wave count, we concluded that this upward trending consolidation zone was actually the unfolding of the fifth wave. Now, typically after the fifth wave, or rather a correctionary wave, so my count basically suggests that the fifth wave ended here. So this bull trend was the end of the fifth wave. And since then, what we've been experiencing in the market is a combined correction, which, by the way, I have been reading about a lot in this book. I would like to show you this book if you can catch it. This is the Elliot Wave Fibonacci High Probability Trading, written by Jared Sanders. And this book talks a lot about the corrections and the combination of corrections. It also talks about Elliot Wave in a very simple manner. There is a book by Robert Precher, but I feel like it's a little bit complicated and you have to give it a lot of reads to really let it condense in your mind. This book super simplifies the whole concept. And in this book, if you read, you will come across a concept of combination correctionary waves. And here's what we can observe, that this was the A, B, C. So this is a flat correction, with this being the A, B, B, C. And then finally, this wave that you're seeing, this is called the X wave, which is very commonly observed in between two correctionary waves following each other. Now, correctionary waves can be combination of two different or three different types, usually not more than three different types. And then what we observed here is the B and C. So this is the zigzag combination. So this was the wave A, this is the wave B, and this is the wave. So A, B, and C. So this is A, B. No, so I marked it a little bit wrong. So this was the ending of the fifth wave and this was the beginning of the wave A. So beginning of A, beginning of B, beginning of C. This was the beginning of X, beginning of A, beginning of B, and this was the beginning of wave C. Typically the marking should be done at the end, but since I've already made it at the beginning, I'm not going to be correcting that. So then what is this? This is the beginning of wave one of a primary trend. Now, the fact that the previous high has already been breached, and why do I believe that it is the beginning of a primary trend? The simple answer lies in volume analysis and momentum analysis. So the fact that this breakout above the lifetime high has happened in a very strong candle with very strong volumes is testimony in itself. A strong candle with strong volume like this is typically noticed at the beginning of a major trend. So it occurring over here is a pretty good sign. Now, if you go one time frame lower, on the 75-minute time frame, we can also see that the RSI of the 75-minute time frame, the RSI of 25 period on the 75-minute time frame has also breached its previous resistance. This is the resistance which it was maintaining when the correction was going on Nifty. The combined correction that we've just noted was going on Nifty, and this resistance having been breached now is a sign that we can see more upward activity. So the next question is, where is the resistance? Where is the next resistance? Now the next resistance is extremely tricky. On the basis of the trend line that we have, I believe the next resistance can be, so I'm just marking the trend line level that I'm seeing, 23,100, and roughly it appears there's where the resistance can be. Now, what is also important to do the smaller impulse wave count on the wave that is unfolding. And if we go in to do that, we are looking at wave 1 being here, wave 2. This was probably the wave 3 because of how strong it was. So this is this, or this is the wave 3. Most likely that can't be, because the Elliot wave rule states that the wave 3 cannot be the shortest wave, right? And this looks like the unfolding of the wave 4. Now the thing is that I can wave 5. So this is the wave 1 for sure. This was the correctionary wave 2. Now the thing is that this entire thing can also be wave 3, or this could have been wave 3 with a flattish wave 4 and wave 5. The thing is, it's very hard to tell right now. Like I said, Elliot wave counts are clearer in hindsight. Either way, on a longer time frame, we are looking at more bullishness to come. Now, if the market goes below the level of 22,775 and touches the level of 22,500, so if it sustains 22,775, it will mean that this is the unfolding of the wave 3, not the wave 5. If we go down to 22,750, it will mean that this was the wave 5 and we've taken an ABC correction. One way or another, a little bit of downside activity can be experienced, because remember, sentiments have suddenly flipped, and when sentiment suddenly flips, a little bit of an extreme reaction comes. So because we are above 23,000, a lot of bullish momentum or latecomers might enter the market. whether that's going to have a very bullish move on the market or bearish move on the market. I would say the next few days of activity is a little bit difficult to predict at this stage. What we can say with certainty is this is the beginning of a new bull trend on the basis of the momentum and the volume analysis. Given that there is uncertainty on the very, very short term, what should the strategy be? The strategy is now to look at stocks where there has been an established bull trend as per the daily time frame, as per the weekly time frame, and over there identify what an ideal entry point would look like on the basis of the smaller time frame like 75 and 15-minute time frames. Now, even if you take the Nifty 500 stocks, I prefer to stick to my watch list of 200 stocks. But even if you're looking at Nifty 500, say, just identify stocks where there already is an established bull trend. Don't bet on reversal stocks at this point of time. And over there, you can identify favorable entry position. So that means don't enter the stocks right away, because you might end up entering right at the top. Instead, what you want to do is buy the dip. So wait for that dip. Even if that dip occurs at a slightly higher point than the current market price, it's a matter of discipline and habit. And place your stop losses on all your active positions. You know that placing the stop loss goes without saying, irrespective of the market condition. Again, that is also a matter of habit and discipline. This is the Elliot wave count update that I had promised for this session. Let's now move on to the analysis of Bank Nifty. All right, so this is the 3-minute time frame of Bank Nifty, and what we can see is that again the 100 EMA at 47,000 has yielded super strong support on Bank Nifty as well. 47,250 acted as pretty good support. Now we are headed for the resistance of 49,500, or this thickened blue line which we've been observing since quite a few days. And what I can see is that on the 75-minute time frame, the momentum of the Bank Nifty has been pretty strong. What I do notice is a little bit lacking on the volumes compared to Nifty in the Bank Nifty, and honestly, when I look at banking stocks, I am not seeing them as attractive as I considered them in the last leg of upside. In fact, in next leg of rally that we are going to witness in the market, right, I am expecting a major sectoral churn to happen. So the sectors which have rallied in the past may or may not participate in the rally that we will be experiencing in the next few weeks. And we can expect sectors which have been on the side end of the road to maybe participate, for example, IT being one of my top picks for the next rally. The daily time frame, we can still see some negative divergence here, and we are not seeing a lot of positive signal as we did on Nifty. So here I am a little bit, so one thing that is also becoming a little evident is that the volume, there is mixed signals from the volume, because it did start increasing, but for some reason the volume participation didn't really come through today, which makes sense because in the banking sector, if you see some big bad news are seeping in, even though on an individual stock level, that does spook the entire sector out. So that might be the reason for the lower volume participation. But either way, that's not a good signal for us. So Bank Nifty, I would suggest to be a little bit careful in making fresh positions on your banking stocks. I personally have been closing out the banking positions on the stocks that I manage, or the positions accounts that I manage for clients. That being said, now let's move on to our favorite section, because I see a lot of interest in this section, the indices, the relative index study. So this is the index charts of various sectors plotted, and I again want to just look at this from the 13th of May, because that's when a real reversal happened. And we can see the PSE sector is back with a bang. It's been rallying very strongly since the past many weeks, many months, and it looks like it's here to stay. Now the rally and also the metal and the realty sector seems to be continuing, but like I said last week also, realty and infra sector, some signs of exhaustion are coming in, so I'm a little bit weary. But the metal sector continues to look pretty attractive. However, it is proving a little bit difficult to find a suitable entry point with nice risk reward ratio. That is why I'm not really making fresh bets on the metal sector. PSE sector, on the other hand, is offering some opportunities. However, it's still risky. The energy sector is a mixed bag in the sense that, because I'm expecting the crude oil prices to rally. Actually, let's just take a look at crude oil, because it's been a while since I did, and I want to get the latest sense. Minute time frame. Yeah, so you see this positive divergence developing here. This is what is making me very uncomfortable about investing in the energy sector. This positive divergence means that if crude oil starts to rally, then we might experience a little bit of hardship for the overall energy sector. That is why I don't want to participate there unless I see something very compelling. Consumer durable sector has been underperforming the overall market, so I'm not very interested in that specific sector right now. And see, the overall market, I feel, is going through a sectoral churn. So in every sector, there are winners and there are losers. Except for the PSE sector, I think no other sector is giving a very strong sense of impeding rally. The IT sector is definitely trying to come out. Now, where is my IT sector chart? Seems to be missing. So did it get deleted? CNXIT. So I'm going to find CNXIT and just going to add it back. There we go. CNXIT, where did it get added? Oh, here it is. Added it twice. Let's see. Let's remove it once. Yeah, so the CNXIT sector has not done that great in the sense that this week it's only rallied 3.28%, while the CNX 500 index, which I use as a benchmark, has rallied almost 5%. Now, in the CNX IT, again, I do think it can participate majorly in the next upcoming rally, but right now it is still forming its bottom. It's not done forming the bottom, it's still forming the bottom. So I haven't really started buying IT stocks majorly. I have started accumulating it. I'm not done accumulating it, but in small pockets. Pharma healthcare opportunities are there, but again, a little bit of a mixed bag. I think they are very good for swing at this stage. Long-term investing, a little bit on the back step there. FMCG, way better opportunities available, because right now, since I am expecting a new bull run to get started here in the market, FMCG is more on the defensive side. So we don't really want to participate or commit our money in a relatively lower delivering kind of a sector, I would say. Right now, that being said, if you want my updates on a regular basis, I urge you to join my Telegram channel. How can you join? Hop over to Telegram, search Trade with Kavita. Be sure you're entering the right name, because there are lots of fake channels running with my name. So you want to join the correct channel. You will see my daily market commentary there. You'll see information about my webinars there, and you will also see this link through which you can connect with me one-on-one if you want to connect with me. So I'm just going to forward this link again in case you want to take the advantage and connect with me. Now let me just, don't go with the text, right? So this is my Telegram channel. I urge you to join it. And I also want to talk to you about how you can ask your stock queries to me. So this is the stock request form. If you fill up this form, your stock queries come directly to me. And in this live session, I'm going to be answering some of the queries. So if you have stock queries, just go on this link, EXP-Invest.in/stock request. You will end up at this form. Fill in your name, your phone number, your name of the stock in the format that I have mentioned, NSE : and name of the stock. Or if you don't know what the ticker name of your stock is, just do a quick Google search with the name of the company and write ticker name. Google will tell you what you need to use. Add your average cost price and add your question or whatever your comment is. Right? There are some terms of use. Please make sure that you're going through them. Now with that, let's get started with answering some of the stock queries for the members who joined us. So now I will switch back, and we've already helped out like more than 170 people, and let's get started with today's. So Ranjit is asking for analysis of IRCon. So Ranjit wants to know whether he can hold a further exit. His cost price is 237.5. So IRCon, I think, is one of the stocks where a very strong underlying bull trend is unfolding. So you should definitely consider holding on to the stock. And what I can see is temporarily it might be taking a little bit of a correction, but don't worry, don't get phased by that, because the RSI is very bullish, because the volume is growing every time the price gives a new breakout or creates a new high. It is very attractive. The fact that the stock hasn't really moved a lot in the last maybe 3-4 months is because it was in a bit of a correctionary phase. So if you just attended the entire session on Elliot wave count, this appears to be a zigzag correction, but a truncated one, in the sense that it has created the A, B, C correction, but the C was a little bit short because maybe the underlying trend is quite strong in the stock, which is a pretty common phenomena. It is not necessary that the last wave of correction breach the first wave of correction. Now here what I can see is that a new breakout has already occurred, and this breakout has happened with strong volumes as well, and the price is taking a little bit of a dip. So this is definitely a continue to hold a stock for you, and your stop loss that you need to maintain, right? So I don't expect this previous low to get breached. So giving you the support of 20 and the 100 EMA, I think 210 would serve as a pretty legitimate support for you. Now if I refresh and if I draw some trend lines on this, such a strong rally that even drawing trend lines is proving to be really hard, but let's try. So these two peaks seem well established, so we'll use that as a reference, and I think that is pretty accurate because I am getting a lot of overlapping points, which is fabulous. So based on the trend lines that I have drawn, basically the angle or the slope with which the price has been unfolding on this stock, I would expect it to, at least the first target for this to be around 360 rupees on the stock. See, that being said, this is not very attractive for fresh entry yet because the risk reward ratio is not attractive, and this point is more for the other listeners than for you, Ranjit ji. So since you already have an active position, I would suggest you continue continue to hold and maintain the levels that I've mentioned as stop loss and target. So at the spot price or current price of 272, your stop loss is 213.7 and your target is 354 approximately. But remember, this is the first target. I don't want you to book your profits and get out. Once the stock crosses above 340 rupees, check back in with respect to what you should do next. So for Anuj, we'll take a look at eMudra. Now in eMudra, again, strong rally, but clearly lots of resistance, and it seems to be taking resistance at the level of 835, and it's also forming a bit of a negative divergence on daily and the 75-minute time frame. So your cost price is 470. So it seems like you're holding the stock for a long term. See, for the short term, I would suggest book your profits for the time being, and when the stock takes some dip, re-enter. However, the 75-minute time frame itself is looking quite bullish. So even if it does take a dip, might not be a lot. So for you, I would suggest use the stop loss of 606 and continue to hold the stock with a target of 950 rupees. Now for Bharat, let's take a look at GPT Health. I don't find this stock attractive at all because, as you can see, it is in a downtrend and right now the market is super bullish. Not the kind of stock you really want to stay invested in because you're incurring not just absolute loss but also huge opportunity cost. So I would suggest you exit the stock, and there are lots of better opportunities to participate in. If you want some suggestions, you're welcome to join my Telegram channel, where time to time I keep sharing the stock templates of the stock recommendations which I have shared with my members, along with a link which you can use to purchase those stock ideas. Now Puneet is asking for analysis of Coal India. What are the targets? And so I request everyone to please use the format which has been suggested. For Coal India, we can see very strong rally unfolding with very strong volumes. Like I said, the PSC sector continues to look pretty attractive. The rally that is unfolding continues to do that with super strong volumes. So coming back to the daily time frame on Coal India, see, over here bull trend was continuing. Since then, we've seen a little bit of correction, but healthy correction. And now we see breakout for a fresh leg of rally already taken place with strong volumes. And this breakout on Coal India actually happened before Nifty technically gave a breakout, which is fabulous. So here what I am seeing is that in the short term, you might expect a bit of a dip to the level of 4. And considering that, I would recommend you to use a stop loss at the level of 7. Now, to answer your question about where a potential target can lie, we're going to have to switch to the weekly time frame and redraw these trend lines, which seem not so great. So this is the support trend line. And if I keep cloning this to match the other key support resistance levels, it gives me a pretty good trajectory for the stock. And the way it has given a breakout above this trend line and continues to move higher, I would expect the very next trend line to act as the resistance. So your next target for the stock would be around 650. Next, we'll take a look at a new stock that I have never really studied, Vari Renewables. I can see this is a very illiquid stock, which makes it slightly difficult. Sure, there is volume participation. Let's get a little bit more information on this stock. I can see that this is a mid-cap stock, not very small. I don't really care about that. The income has been increasing significantly. See, if you want to continue to hold on to the stock for a long term, that's a good idea. But since you've already bought it at only 2400, which is quite recent, it seems like you've done a bit of a FOMO purchase. So this is a stock that you can continue to hold for a long term, and I wouldn't recommend you allocate more than 2% of your total capital to this stock. And like I said, continue to hold for the long term. This stock, it's very difficult to put a stop loss and target without me really looking into the fundamentals, since I'm not aware of the fundamentals in the stock. So my overall recommendation to you would be that the technical analysis on this suggests strong underlying momentum and good participations on the upside. So continue to hold it for long term, not more than 2% of your total capital to be allocated on. Let's now take a look at Vedanta for Mr. Vishal Singh. So I see a strong rally unfolding on Vedanta here. And let's just redraw the trend lines again. Personally, I am not a big fan of this stock or the company or the management. I like to steer clear of companies where I have reasons to believe that the corporate governance may be a little gray rather than black and white. So this is the point where the stock took strong support, and I will adjust this one a little bit. And just purely on the basis of the trend, that seems like a good resistance zone. But there is another resistance right here. So I also captured this point. What am I looking at? The daily time frame. See, this is what I'm not comfortable with. Up to this point, up to this point, we saw the rally with strong participation, which was a signal that the rally can continue. However, the next leg of the rally that has unfolded, right, we've not seen a lot of participation. In fact, the volume has strongly increased when the price slightly declined. That makes me slightly uncomfortable, and I wouldn't touch the stock. In fact, if I were holding it, I would be booking my profit. So my recommendation to you would be what I would do if I had a long position, and I would be booking profits in my holdings at this point of time on the stock. Now let's move on to L for Naval. Again, fundamental issues. I don't trust the company. I don't trust the Adani Group, to be honest. So I like to steer clear of its stocks. Too volatile for my taste. I am sure looking to make money, but not at the cost of my mental peace, which is exactly what I don't get if I trade in Adani. So I stopped trading in Adani stocks when the whole fiasco of the Hindenburg report happened. Technically, I am not seeing any reason why I would be interested in this stock. So I would say exit. There are way better opportunities in the market right now, technically and fundamentally. Now for Amar, let's take a look at GRSE on the biggest winner in the Nifty 500. Fantastic rally unfolding with very strong volumes. So you've bought it at 881. I think you should definitely continue to hold. Now, what target should I give you on this fabulous mover? Very hard to give a target, but let me try to capture some of the key resistance or support levels. So this seems like the new trend that the stock is unfolding, and the trend has accelerated considerably since June 22. So given the acceleration, we also need to change our trend line. And what I can see is that right now the stock has moved up quite a bit, and with a lot of conviction, with a lot of strength, with a lot of volume participation, but stands at a resistance. But even though the stock is at a resistance, since the volume participation has been significantly strong and the stock has been moving forward with strengthening momentum, there is no reason why you should worry. Even if the stock dips a little bit, I would suggest that in this stock, considering this is a mid-cap stock, you can maintain a healthy 5% allocation of your total portfolio, not more than that. And if the stock dips and if your overall allocation in the stock is less than 5%, then use that dip to add more. Now here we see a gap. Whether this is an exhaustion gap or a breakaway gap, I don't think this is an exhaustion gap at all by what I'm seeing on momentum and volume analysis. However, the region around this gap will definitely act as a support. So 1313 is where I would expect some support to come in. So 1300 would technically be the first support for the stock. Start accumulating more over there and keep accumulating till around 1200 levels. I think that is a pretty good support. And as for a stop loss, unfortunately, it won't be possible for me to give you a smaller stop loss than 1012. But again, I think the volume and momentum is so strong in the stock, you should definitely continue to hold it for the long term. So let's look at ONGC. So we have Lohit. He's saying that he's bought it at 280 and he thinks 292 is a resistance. And what is my opinion? I think I agree with you. 292 is definitely a resistance because of previous price peaks as well as presence of a resistance trend line over there. And also there is a strong RSI negative divergence, which I am observing. Also, as the price has been increasing, the volume participation has decreased a little bit. So I would expect the stock to maybe retest the level of 255, 250 sometime soon. And once a healthy correction has unfolded here, maybe I'll wait for the RSI on 75-minute time frame to retest the level of 30 before I venture into ONGC again, because multiple negative divergences have started occurring across multiple time frames. And like I said, the energy sector is a little bit risky at this point. So you want to trade with caution. I would suggest if 292 comes, exit and book your profit. And from a very short-term perspective, maintain your stop loss at 77. Now we are looking at the last stock of the day. He's asking for analysis of Piccadilly. So let's take a look at Piccadilly. We can see this alcohol stock is doing pretty well. Now, I don't know if you guys are aware, but this stock has become very popular of late because sometime last year it won an award. It's the whiskey that it manufactures won the award of being the best whiskey in the whole world. So since then, a lot of interest has built up in the stock, and since then it has been rallying also significantly. I think it was sometime maybe in October. I don't remember exactly when it happened, but it was a pretty significant news. So here what I can see is that the stock has rallied beautifully, gone 2x in just 2 months. And underlying trend is pretty strong. Volume participation also keeps giving. Keep holding the stock. It's looking quite attractive. Just maintain stop loss at this recent low it forged at around 618 and continue to hold on to the stock. However, since this is, let's just take a quick look at what the market cap of the stock is. So this is a small cap stock, so you don't want to allocate more than 2% of your total capital from your portfolio. With that, we come to the end of today's session. Thank you so much for joining in. And if you have any questions, do reach out to me via the stock request form. EXP-Invest.in/stock request is what you need to visit and fill it in. And if you want to get connected with me for maybe career counseling or next steps in the world of swing trading or how to improve your strategies, or if you want to learn, just join my Telegram channel and book Understanding the Services Offering call, the link of which I've already shared on my channel. So I will see you again on Wednesday in my Let's Get Technical series, where I will bring to you one chart and we will do a deep dive into what is going on there and what it tells us about the next move that we can expect. So thank you for being such a great audience, and